Hey everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading, tomorrow being the 8th of the month. Apologies for no video yesterday. I did record a video, but all of the audio decided not to work on me, so that was kind of fun, but should be good to go. I can see the audio bar moving, so we should be alright this time around. As always, before we jump into the charts, make sure to scroll down and click on the Join the Daily Outlook newsletter. From here, you'll be able to register for our newsletter email list to be notified every time one of these videos comes out. Along with that, in the newsletter, we talk about a bunch of stuff that we just don't have time for in this video itself, and that's going to be everything from stocks, options, crypto, you name it. That's going to be covered inside of there. So make sure to sign up for that if you haven't done so already so you don't miss anything within that email. Along with that, click on the Live Trade Room subscription and trial info so you can sign up for a free 3-day trial of the Live Trade Room. You can hang out with us for a couple days and see what we're all about. It's a really great way to kind of log in and see the room, but along with that, see how we trade throughout the day and ask questions and kind of meet the membership a little bit, and just a great way to kind of get your feet a little bit wet and see what we're all about. So make sure to do that if you haven't signed up for it already. Now, starting off the bat, the euro has had a pretty nice rally to the upside. We were looking for a little bit of support right here, never ended up coming back, but that's not to say that it's done yet. I want to see this earlier wedge bottom, which was being used as support. They broke through, use it as resistance and resistance. We've broken back above it. Now we can use it as support again, and notably, the other wedge high is now being used as resistance as well. But we also have horizontal support at 23,695, and now we have the moving average coming into play as well. So everything is kind of stacking up all around this same place here. So if we can get a halfway decent pullback in the next couple candles, we might be able to find a nice buy zone, kind of a kill zone, if you will, in that little dip there for another rally up. Now, the big movement that we're getting right now, it does look pretty strong to the upside. I mean, it's hard not to give the bulls a little bit of credit here. The buyers have been rallying very aggressively, and they're putting the gas pedal down. I mean, heavy amounts of bullish movement, and so much so that it almost leads me to be a little bit concerned. We have a huge breakout above those previous swing highs, breaking out above that area, but not really much follow through. You'll notice weak bull bar, weak bull bar, weak bull bar, weak bull bar, heavy bear bar, but bad follow through. So we're not seeing signs that the sellers are taking over or anything, but we're seeing signs that the buyers, they might not be super interested at these massive highs that we're stuck on right now. And generally, what that means is we're probably due for a pullback. Now, a pullback could come in a lot of different forms. It could be looking for a pullback, down into that major support area we were just marking up, or it could just simply be this little pullback that we're seeing right here, making a couple new candle lows, and that's about it before it goes flying back up again. Those are things that we do need to be a little bit, not necessarily concerned about, but at least understand that that might be all the pullback that this market has. Now, that said, generally speaking, pullbacks tend to be a little bit bigger than just one or two candles after such a strong rally higher and after it's already had a couple pullbacks. So what I would really like to see, honestly, is a slightly deeper pullback. Not necessarily, way back down here again, but it wouldn't hurt to see it come back and trap 22,810. That would be a nice area for trapping to push the market back up, and that would also coincide pretty closely to 22,545, another area of horizontal support that we've been dealing with for quite a while. Now, that does also go along with the fact that we have the range. They broke out underneath it, failed, rallied higher. That retest is going to be a big zone of interest. Now, pretty far away from that, so it's not going to happen tomorrow. Well, I mean, it might, but we're probably looking at something like that in, a couple weeks' time at this point. Overall, definitely on the buy side, but I think we need a little bit of a pullback, so we'll be looking to buy dips in the overnight, just given looks like the buyers think we're a little too lofty, so I would have to agree with them. I think it's dip time more than anything else. Over on gold, we have a little bit of fluctuation. We had that nice bear turn to the downside. The bear channel was working its way very nice, but then it just kind of gave it up. We were talking about that break-even point from before where the sellers were trying to get in, but that big move to the downside, likely a lot of sellers don't necessarily want to sell directly underneath there. They want to try to get a slightly better price. When you're getting into a trade and you see this humongous bar form and you're not in it yet, now you look at it thinking, most of the move's probably done already. Do I really want to jump in now? Some will, but for the most part, a lot of traders didn't, and that caused a pretty big lift to the upside, and a lot of these sellers are still holding that bag. So sellers who sold at 1320.4, they're probably looking to get out at break even, selling along the way, adding to their positions on the way up, and then looking to exit everything at that 20.4. So that 20.4 area is a hot spot that I'm going to be keeping an eye on in the overnight session to see if they can drive down into that area to see if we can get some nice bouncing there. Now, the overall movement, obviously this is nice and bullish, and a couple things do line up with that, very similar to what we were just talking about in the euro. Kind of a middle trap there. If we can get a dip underneath that for a rally back up, we also have the break-even point. And if you measure from low to high, that would line up pretty closely to probably between a 50 and 61.8 inside there as well. So a lot of levels kind of stacking up on top of each other. But if we look backward a little bit, we can see that this area has become a little bit of a larger area of support. Not farther back, I mean, it did bounce around a little bit, but more recently, right? We had a lot of support and resistance inside here, a beautiful wick test. We had a failure to break down before they finally gave it up and broke back up. Use it as resistance, use it as support. So that is another area that kind of adds to the congestion of a pullback down into that 20.4. Overall, we have had a very bearish day today. We gapped way up, and a lot of the markets had a huge gap from the ETH. And now they're pulling back. So with this heavy pullback to the downside, very likely that we're going to see a secondary leg. It's hard to go this many bear bars back to back to back to back to back all the way down and not see a secondary leg attempt. So likely we're going to get another bear leg to the downside, but I am watching that 20.4 as an area of support. Over on crude oil, still stuck inside that wedge. Nothing's really changed. We did come down and low test that wedge bottom, coming back down to retest some of those low closes. Missed it by just a little bit, but a lot of things all lining up in the same place. We have rising wedge bottom support. We have the horizontal support at 60.53. And we also have, if you measure up from low to high, around about a 61.8% floating in that same location as well. So a lot of things kind of finding some balance at around that 60.50 to 60.60 area, and the buyers seem to have responded in kind. Now, obviously, today was inventory day, and inventories did come out as expected with the API. Not quite as aggressive, though. It still wasn't good. It was bearish, but it was less bad, I think is the best way to put it. When you have that type of situation, when it's less bad than they were expecting, usually you see a little bit of a bull lift first, which they did have, and then you see it tumble all the way back down again, which is exactly what we had. So not really a big surprise in terms of overall movement. They failed off of major resistance at 62.85, couldn't break above it, and even tried to come back on the inventories to retest it and missed it there. Buyers are obviously not super convinced. You know, this breakout move didn't occur. They tried breaking above it and it failed. They tried looking at it and maybe, you know, zooming out a little bit and looking at a structural picture. Kind of looks like a head and shoulders. And although a head and shoulders is a continuation pattern, it's a continuation after a deep correction. So what does that mean? Well, we're looking for left shoulder, head, right shoulder, deep correction, find some buying down here, and then continue it back up. So at the moment, it looks like we might need a little bit more of a pullback. So if we mark this up, the cool thing about TradingView, they have a function specifically for head and shoulders patterns right here. And we can mark this all up. So we'll just start from the low of when that leg to the upside started. We've got the left shoulder right here. We have the head. And we have the right shoulder right here. Now, in terms of the objectives on this, this can be a lot of different locations. Generally speaking, I want to see this go about, I mean, anywhere from 100 to 200% of the size of the smallest shoulder. Now, that might seem a little bit scary because it is pretty far away, but if we measure up the most recent leg and kind of figure out what they want to do here, let's take a look at these settings and mark it at a -1 and -2. The price objective to the downside could be as low as 57.26, but it might even be further at 53.77. Now, this is obviously not something that's going to happen tomorrow, right? This is something that could happen months in the future. But that does add a little bit of a bear tone if this market starts breaking down. Now, typically with a head and shoulders pattern, you want to see it break down below the neckline, and, well, we have quite a ways to go until that happens. So this is purely speculation right now, just based on the fact that it looks like a head and shoulders. But if we do start breaking down, we might have to keep track of the fact that this might tumble all the way down to 57.26, and that might just be the start of it as it drops further to 53.77. Now, if we can hit 57.26, there'll be a monster area of support. 53.77 will be another huge area of support, but again, months in advance. Right now, I think in the shorter term, I'm more so looking for the mark to want to find some balance and continue down, maybe for one more bear leg lower. But, you know, the overall movement, we have a nice hold-off support. We have a, let me get rid of this earlier fib so it doesn't confuse me. We have the rising wedge bottom support. We have horizontal support all coming into the same place. And again, around about a 61.8% retracement is pullback inside of there. it all lines up really well. So it's hard to disagree with the buyers wanting to come in, but it's also really tough for me to look at this bear bar and think, yeah, man, the only thing I want to do is buy, or the only thing I want to do is sell. This just makes me think, man, we're probably in a range, and any fade outside of this, I'm assuming is going to be a failure and probably going to fail back in. So at the moment, I'm looking for more range-bound pressure, but we're kind of in the middle, so waiting for price to get down cheap or up high so we can start selling at the highs, buying at the lows until we can get a breakout of this big old inventory bar. And then finally on the S&P, whew, man, what a wild ride the S&P had. We opened up yesterday in the ETH. You sometimes see these types of gaps over the weekend, you know, opening up from Sunday after Monday's close, but you don't typically see this big of a gap during the week. And that was a 20-some-odd point gap just on the open, and it was at one point almost 40 points from that open to close, or close to open, I guess, in this case. So that was a huge, huge dip, and a lot of traders, I am absolutely positive of, bought that dip, assuming that, well, you don't get that very often. When you do get an interweek pullback on a gap like that, it usually fills very quickly, more often than not. Now, not always. As we know, all gaps fill at some point. Some fill the same day. Other times they fill 7 years from now. So, I mean, gaps are a little bit, they require a little bit of discretion. But obviously, buyers did buy into that pretty aggressively and push the market back up. We did complete that gap fill, and you can see the amount of resistance that came off of that gap fill. They are able to close above it, though, so we're still stuck inside the same wedge. Nothing much has changed in that regard, but definitely something very interesting. You don't very often see a humongous gap during the week like that, and that is exactly what we had on the S&P. So with the S&P on that big old gap, they did come back and fill that gap, so a lot of that unfinished business, it's already done. So now it's just a matter of seeing what they want to do. Now, if we look at the most recent candle formations to the upside, bull into a stronger bull, weak bull into a stronger bull, kind of mediocre. It looks like the buyers are really struggling along the way. Lots of wick on the top, lots of wick on the top. Not a single one of these candles, aside from this one, could close above the previous candle's high, right? This one failed, this one closed on the previous candle's high. Not a lot of conviction. So with that lack of conviction, it's more likely to see a little bit more of a pullback. And honestly, it wouldn't hurt my feelings to see a pullback to get a dip back to 26.82 to retest that breakout point. We broke underneath it, failed, used it as resistance several times, broke back above it. I would love to see a bounce off of that. We almost got it on that gap down. So that's kind of what I'm looking for. Even though we are bullish right now and we do have, well, about 16 plus hours of bullishness behind us, I would still rather look to trade this more of a range with a slight bull bias on those dips. On dips, you're probably going to be able to get a nice bounce for at least a scalp, but I would like to see a larger pullback to 26.82. So that's going to do it for the outlook. Now, tomorrow's news, we don't have much of anything. There's no news for the U.S. All of it is outside of the U.S. Tomorrow morning at 7:45 out of the Eurozone, we have the deposit facility rate forecasted at negative 0.4. At 7:45, again, 7:45, we have the ECB interest rate decision forecasted at flat 0. And then at 8:30, we have the ECB press conference as well. So definitely a very action-packed morning. And even though it's not U.S.-based, you tend to feel those kinds of moves in the U.S. session. So be a little bit careful tomorrow morning because we do have some pretty big news coming out with the ECB press conferences and all that fun stuff. Later on in the evening session out of Japan, we have the Bank of Japan monetary policy statements as well as the Bank of Japan press conference. So plenty of news for tomorrow. Nothing for the U.S. per se, but again, with the ECB press conferences going on, it'll still probably move U.S. markets just fine. So aside from that, though, all the markets look pretty straightforward. Not a whole lot that we have to worry about in terms of news, which is kind of nice. Morning session might be a little bit choppier, but we'll have to wait and see. And like we always say, it doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.